Hello and welcome to 3.0 TV. This is Shikha Singh. Recent Web3 startup funding rounds have highlighted a dynamic and evolving investment landscape. Despite a challenging market, venture capital funding has remained robust, with significant capital flowing into innovative projects across various sectors. Today, we are pleased to welcome Mr. Pranav Agarwal, Head of Capital at Foundership Ventures, who will provide insights into the latest Web3 funding rounds. Welcome to 3.0 TV, sir.
Thanks, Shikha. Pleasure to be here.
So my first question to you is that according to our PitchBook data, crypto startups saw a 2.5% rise in venture capital funding in Q2 compared to Q1. So which sectors, according to you, within the Web3 space is attracting the most funding in recent rounds? And what does this indicate about the future trends?
I think there's been a very slight uptick in Q2 because it slowed down with the market overall slowing down. However, what we've seen is extremely high interest in AI, decentralized physical infrastructure or DeepIn, and we're also continuously seeing a lot of new L2s being funded, or especially scaling solutions with modular L1 chains. The trilemma in blockchain, which is still existing, is trying to be solved by a lot of people. So I think those are the three sectors which are getting a lot of the attention from VCs at the moment.
Right. So my next question to you is, what challenges are Web3 startups facing in securing funding in the current market, and how are they adapting to these challenging conditions?
So I think a lot of Web3 founders are building copycat products, and that is where the investors are seeing a lack of innovation. The other problem that we are seeing is startups don't have enough traction. Now, Web3 gives you a global platform, global customer base. So what VCs want to see is early stage startups build a community, build user base, or at least get to some amount of traction before they raise large rounds of capital. Or it's like a super innovative IP rich product, in which case the investor is investing in the tech and not the ecosystem. So I think that is one thing which the founders can definitely change. What we're also seeing is founders becoming a lot more reasonable with their valuations in the last 3 months than they were in the Jan to March quarter, especially because markets were pumping in Q1.
Very rightly said that the startups is not gaining traction, and there's a report by DeFi Llama that states that startups has significantly slowed down in the past 18 months compared to the $25.3 billion and $29.4 billion raised in 2021 and 2022. So do you know the specific reason behind this decline in funding this year?
Yes. So the reason behind the funding in 2024 and even 2023 to a large part is mainly because of macro factors. Right. The global liquidity has dried up. The American interest rates have been at an all-time high for the last 2 decades. So we're seeing a lot of money go risk off rather than risk on, which it was in the case of the post-COVID 21-22 liquidity boom, which saw an all-time high liquidity across the world. So I think with the recent expectation that the Fed may reduce rates in Q3, Q4, we might see liquidity go up and funding restart. But for now, I think a lot of the funding is going to remain outside of high risk opportunities like venture capital.
Right. So talking about startups, what do you think will be the emerging trends, and they're likely to catch the traction? I mean, different areas, various areas like DeFi, blockchain gaming, layer 1, what is it going to be?
So a lot of us are now beginning to feel that consumer apps in crypto are lacking, or crypto lacks overall, Web3 space lacks consumer apps. So we're now looking for investing and backing a lot of B2C consumer apps. There's so much infrastructure, there's so much DeFi, but what we're not seeing is a late stage direct to consumer app similar to a SocialFi project or any sort of user base. Like when you look at the 2008 or 10 stage for Web 2, I can compare it to the Ubers, Airbnbs and Flipkarts or Amazons of the world, or Facebooks. So that is what we don't have when it comes to the crypto Web3 world today. And that I think is going to be the next big trend in the next 2 years, with a lot of AI driven consumer apps taking over that space, because I think AI remains a large theme, anchor theme, not only across Web3, but overall for emerging tech.
Right, so we have seen a lot of funds flow into the AI sector, and India specifically is, in AI sectors, AI startups is gaining a lot of traction, and it is home to more than 100 generative AI startups, and these startups have raised more than $600 million since 2019. So, do you believe this level of funding will continue in the future?
Absolutely. I think just like a lot of people feel that AI is overvalued and is a bubble, but in fact, in my books and us at Foundership, we believe that AI will become an anchor cornerstone of investing in tech development in the next 2 to 3 years. So we see the funding increase as more and more startups get to a point where they deploy AI-driven or AI-enabled tech to the consumers.
Well, thank you so much for sharing your insights and expertise with us. Thank you so much for joining and being with us. Thank you so much, sir.
Always a pleasure. Thank you, Shekha. Thank you.
Thank you. We will keep you updated with more such interesting updates. Until then, keep watching 3.2 TV. Do like, share, and subscribe to our YouTube channel. Do log on to the website www.3versetv.io or scan the QR code to know more.